Hello everyone, welcome to KidSpective!
Today we're in POWIIS, and in this video we'll be looking at a brief history of credit. Credit is now a very important part of our lives, and there was one point in time that was critical for its evolution. The 1920s, which created the charge-out card and the charge-out plate. That is, the two precursors to today's credit card.
But first of all, what is credit?
Well, credit is... Wait, what was credit? Credit is a type of plastic from which credit cards are made of.
What?
What, you don't know what credit is?
Dude, credit has no relation whatsoever to plastic.
Oh, then it's the type of card credit cards are made of.
Credit is the assumption that you can borrow money or access goods or services and pay them later. Lenders, merchants, and service providers grant credit based on their confidence that you can be trusted to pay back what you borrowed, along with any financial charges that may apply.
Is it a contract-ish agreement where the borrower gets something of value immediately and agrees to pay for it later, usually with some interest involved?
Exactly. It is thought that the first hint of credit started with consumer loans. In 3500 BCE, it is thought that in Sumer, the first urban civilization, with about 89% of the population living in cities, consumer loans were first used for agricultural purposes.
Agriculture? Is that the culture the Sumerians practiced? Was it very angry?
No, agriculture, essentially, is the science or practice of farming.
I was close. I was
No.
very close.
Yeah, you were very close. Later, in 1800 BC, Babylon made something called the Code of...
Google! The Code of Google. Isn't that abstract? Or is it Java? Wait, JavaScript!
The Code of Hammurabi.
Oh, don't know the language. Is it English?
That's because it isn't a language. It's like a set of rules, laws in fact. So, the code is written, which normalizes and formalizes the first known laws around credit. It establishes maximum interest rates that can be used legally. On loans of grain, it is 33.3% per year, and on loans of silver, 10% per year.
Oh, what about loans of chocolate?
I don't think they needed a legal interest rate for chocolate.
Oh, well I do. Chocolate!
3,345 years later, in 1545 CE, after the Reformation, the first country to establish a legal rate of interest was England, during the reign of Henry VIII. The rate was set to 10%.
Any chocolate for England? Or is that 10% for chocolate? Can I have the remaining 90%?
That 10% is for the money, and enough about the chocolate.
Okay.
Anyway, still in England, but in 1803, a group of tailors came together and swapped information about customers who failed to settle debts. It's the earliest available account of credit reporting, or determining how trustworthy for loans an individual is.
Ooh, am I trustworthy for loans? Are loans free money?
If you think loans are free money, then you are definitely not trustworthy for loans. You have to pay loans back.
I can pay them back in chocolate!
No, you cannot pay loans back in chocolate, especially if it's a money loan.
Oh, can they give me free chocolate? I like dark chocolate.
You have chocolate in your hand.
No, I don't. Oh, anyways, wasn't it in 1864 when Friedrich Raiffeisen established the first rural credit union?
Correct. And in 1899, Atlanta-based retail credit company, RCC, was the first credit bureau and began collecting data on Americans. They not only collected credit information, but political and social preferences as well, and rumors about people's personal lives, which caused criticism over the years. Because some of the facts were suspected, the government wouldn't allow them to automate this information.
Would they automate other information, like if this person likes chocolate?
No chocolate.
Oh, okay. So what year is it now? 1909?
Yes, Alphonse Desjardins formed the first credit union in the USA, New Hampshire, in 1909. The first US credit union law was also passed in Massachusetts, with help from Desjardins and Edwin Feline, another dude in the credit world. The Massachusetts Credit Union Act of 1909 was the first comprehensive credit union law in the USA.
Let's talk about cars. From 1908 to 1928, the first automobile in America was the 1908 Ford Model T. The car cost $850, about the equivalent of $20,000 cash for a car today, which was impossible to get for many Americans. Henry Ford, founder of the Ford Motor Company in 1903, didn't like debt, so he'd allow consumers to put their car on layaway, making weekly payments until it was paid off and they could take their car home. As expected, many consumers didn't want to wait until their car was paid off to drive it home. In 1919, General Motors moved to the head of the line when they created the General Motors Acceptance Corporation to provide customers with car loans. To compete, Ford set up an auto loan subsidiary in 1928, allowing installment loans so customers could drive off with their new vehicle.
Wow! How did you know that?
I like cars. And I read on the back of a chocolate wrapper.
Of course you did. And now comes one of the most important times. We'll go a little back from 1928 into the whole of the 1920s. By the 1920s, credit had exploded upon American society. It was too late to put the genie back in the bottle, since the rise in consumer debt was merely an extension of a long-standing American willingness to get ahead by borrowing.
By this time, generations of Americans had been weaned on easy credit and would accept nothing less. America was being flooded with new immigrants who needed new things. For every pot and pan that had been left at home, a new one was needed after arriving in America.
By 1920, new immigrants comprised 44% of New York's population, 41% of Cleveland's, 39% of New York's, and 24% of the populations in Boston, Buffalo, Detroit, Philadelphia, and Pittsburgh. The charger plate was developed in 1928 and was the precursor to debatably the biggest invention in credit, the credit card. Embossed with the customer's name, city, and state, it had a small paper card for signatures. Charge cards were also invented in the 1920s. Oil companies and companies such as the Western Union usually sold fuel to motorists.
Exactly. And because of this, immigration levels were sky high. Let's look at some numbers. The average annual immigration levels of the USA from 1607 to 1775, it was 3,500. From 1776 to 1884 was 14,200. From 1845 to 1900 was 322,000. And from 1910 to 1965, more than 923,000, nearly a million. And in 1966 to 1989, it dropped back to 482,000.
Did you read that from the back of a chocolate wrapper?
No, I read it from the script on the chocolate wrapper. We had to print it on the chocolate wrapper because we had no more paper left. Sorry.
When did that... Oh, sorry. Let's continue. In June 1934, President Theodore Roosevelt signed the FCU Act, which authorizes federally chartered credit unions in all states, modeled off of the Massachusetts Credit Union Act. Remember that? The FCU division was placed within the Farm Credit Administrations in August. Claude R. Orchard assumed leadership of the Federal Credit Union Supervision, a post he held for 19 years to follow. American Airlines simplified the extension of credit with the air travel card, which allowed passengers to fly now, pay later.
What about paying now and flying later? Or forgetting to pay now and flying now or later?
That's completely irrelevant.
Okay, but chocolate is relevant.
That's even more irrelevant.
Okay, what about dinner or diner?
That's actually in 1950. The first credit card was the Diners Club card. The card was used for travel and entertainment, and the balance had to be paid every month.
Okay, and in 1951, the first bank credit card was introduced by Franklin National Bank, based in Long Island, New York. It didn't take long for others to see how lucrative credit cards could be, and by 1953, there were 60 credit card plans in the United States. In 1958, Bank Card American, now known as Visa, was dropped in Fresno, California. What about 1970?
In 1970, March 10th, the NCUA, or the National Credit Union Administration, was formed to supervise federal credit unions. The National Credit Union Share Insurance Fund, the NCUSIF, was formed to ensure credit union deposits. Also, the Fair Credit Reporting Act, the FCRA, was passed. This required credit bureaus to make the information public and remove any data that may cause discrimination, such as race, sexuality, and disability. RCC changed its name to Equifax in 1975, solidifying 3 credit bureaus as we know them today: Experian, TransUnion, and Equifax. Now, you can talk about 1989, right?
No, but I can talk about
something relevant, please.
Yeah, I can talk about 1985. Yeah, 1985. The Great Chocolate Council, founded in 2029, decided for very secure reasons the production of milk chocolate to chocolatier by, and then the governor named blah blah blah, and then the chocolatiers.
What in the world are you jabbering about? 2029 chocolate?
The chocolate wrapper. Oh shoot! That's the book I'm writing on my palm. Where did I put my script? Oh yeah, I wrote it on top of the book. So, in 1985, credit unions insured by the NCUSIF, which was the National Credit Union Share Insurance Fund, were now backed by full faith and credit of the United States government, which provided extra security to members.
Okay then, I'll talk about 1989. This part is important as well. The 3 agencies, Experian, TransUnion, and Equifax, partnered with a technology company, Fair Isaac and Company, or FICO, to create a credit score, and in 1989, the first FICO score for general use was introduced. It was determined by 35% payment history, 30% amounts owed, 10% of new credit, 15% length of credit history, and 10% credit mix.
Does the credit mix perhaps have anything else in it? Perhaps chocolate?
No chocolate.
Oh, okay. So is old chocolate relevant? Maybe from 1995?
Not chocolate from then, but something else from then?
In
1995?
In 1995, Fannie Mae and Freddie Mac mortgage leaders began using FICO scores to determine if a consumer qualified for a mortgage.
Correct. In 2006, the three major credit reporting agencies decided to create a new score in competition with FICO called the Vantage Score. It started with a different credit score range, but eventually adopted the 530 to 850 model as well, and is now used widely by many lenders to determine credit worthiness.
Hasn't FICO also implemented many changes since those early days? Where there were once one score, there are now various scores based on items purchased. Currently, the latest general score is the FICO 9, but there are sub-scores for auto lending, bank credit cards, and mortgages. 60% of the largest banks use Vantage Score.
All true. Now that you know all that, you might have some credit to repay the loan we were talking about.
Sure, give me 10 to 4,372,641.273 chocolate bars.
Well, that's it for this video. This KidSpective signing off. Bye. Chocolate?
And me.